For the first time in quite a while, banks are actually paying somewhat reasonable interest rates. And I had someone contact me, a very close friend today, and was having a discussion with them about what are the best places to get high interest yield on your bank deposits. And I had some comments for him, which he suggested I should definitely create a video about because they were highly valuable. And so that's what we're going to discuss today, is where is the best place to put your bank deposits. And let's get started. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Thank you for being here. If it is your first time, I am Michael from Offshore Citizen. We help you with relocating abroad, getting second residency, second citizenships, setting up international corporate structures for your business, paying the lowest legal amount of tax possible, getting all kinds of internationalization plans in. And if you're at all interested in any of those things, please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or send a message through offshorecitizen.net. Okay, so it's fairly typical at this point in time that in a lot of banks, you can get, let's call it around 4% interest. Now, this stands in stark contrast to some places in the world where they've had in excess of 10% interest in a bunch of cases. For example, Egypt had traditionally pretty high interest, Georgia had fairly high interest, Dominican Republic at one point had high interest, et cetera, et cetera. There's a bunch of different places. And I once in a while get people who contact me saying, Michael, where can I get the best bank interest? And I think that is a bad initial question. What you want to do is you want to contextualize that question by what is the cost and what is the risk, okay? Now, what are the key pieces I'm looking at here? Well, the most obvious one is sometimes you can get high interest by changing into another currency, and that currency might do badly. Now, if you were to take, for example, the Georgian lari actually has outperformed the US dollar lately, and you were able over the last while to get quite high interest on it. So you actually could have done quite well, even in US dollar terms, let alone in, say, euro or GBP terms. Obviously, the pound has gotten pounded, the euro has been slayed. And so, you could have done fairly well, but I think that's really sort of probabilistic. It's uncertain whether that is going to happen or not. And certainly anytime you're trading into a currency that you're not going to use, you're going to have to trade back. You lose trading both ways. So you're already behind when you start before you start to earn some sort of a yield, and hopefully you do that. The second thing is, of course, whether the banking system is trustworthy, whether you actually are going to get that money. In fact, whether you're going to get any money at all could be questionable. So, for example, I would not particularly trust my money in Egyptian banks. It might be fine, but frankly, if it's going to be a large enough amount of money that it's going to be worth it for me to earn the interest, I think I would rather put it in something much more solid than an Egyptian bank. And we've seen cases like in, for example, Argentina, where they had cases of people putting their money in, say, US dollars, the government forced them to convert it to Argentinian pesos, and that being pretty bad as a decision. So you don't want to get caught in those situations. Now, that's the first part of it. The second part of it, aside from the risk, is the cost. And what do I mean by the cost? Well, certainly there's a hassle of, do I have to go to another country and open up another bank account? Frankly, that might have some diversification value in and of itself, so maybe you can rationalize it. But the bigger one is simply the mind space, okay? So on the risk side, I would sometimes tell people it is ridiculous to risk 100% loss for a 7% return. This is a terrible idea, okay? And I've seen people do this on a number of occasions, for example, in various fields of crypto. Terrible idea. You should absolutely not do that. You want to have asymmetric risk to reward. In other words, your risk of downside should be extremely small relative to the risk or the return that you're going to get on the upside. So for example, a US government bond, if you can get 4% interest off of that, well, the downside is effectively considered to be zero. And so it's only upside. So I think that's kind of the risk-free rate that you're comparing to, right? Here's the thing though. You can run around and you can spend all kinds of time looking for that, extra 1 or 2%. And the cost in terms of your mind space is simply not worth it. You should not do it, okay? A very good friend of mine, I remember maybe like 7 years ago, he was worth a little over $10 million, and he's now worth a few $100 million. And I was discussing with him one day about a particular investment product. I said, hey, have you tried it? He said, yeah, I use it. I said, how does it work? He says, I have no idea. He said, I'm more focused on the 100Xs than on the 10%. So I just put it there and I forget about it, and I go and focus on the opportunities that are going to do 10 or 100 times my investment. And that is much greater wisdom. The truth is that for most people in most situations, the opportunity cost of their mind space is much more important than that extra 1 or 2%. The thing that also goes along with this is the opportunity cost of losing liquidity. So in some cases, you have to lock up your money for an extended period of time. And what does this cost you in opportunity? Well, the truth is that an asset that you can buy can move by 10, 20, 30% in a month, which far, far exceeds anything that's going to happen with that interest rate. So the interest rate is really somewhat immaterial. It's okay if you're not giving up liquidity to have the money sitting there earning interest rather than sitting there earning nothing, because frankly, maybe the amount of time it takes you to get an opportunity is going to be, a year, 2 years, you don't know, right? It's an undefined period of time. Another example of this is back in around 2014, 2015, I was looking at investing in various different stocks. I was very value, low PE type investor at the time. And I looked at HSBC stock. Now at the time, HSBC stock was paying a very high dividend. And I thought, oh great, well I'm comparing to some other things. This has this high dividend, I'm gonna go for it. And what happened was then the dividend ended up getting lowered shortly after I bought, and the stock price went down, and it took quite a while for it to recover. So I learned a valuable lesson at the time, which was that the dividends shouldn't be the driving motivation for a particular investment. I should be basing what I'm going to invest on a solid, good investment, and then the dividend is an added benefit, okay? Similar sort of idea here. You should be focused on what is the best opportunity you can go after. In the meantime, if there's some place that you can plug the money that is A, basically zero risk, B, doesn't give up liquidity, great, park it there. Put zero mind energy into getting yourself that extra 1 or 2% interest. That is irrelevant in the big picture of things compared with this other opportunity that you have. Now you might say, okay, well maybe if you've got $100 million to invest, most people clearly don't, but maybe if you do, then look, you're earning $4 million a year off 4% interest, and if you get another 2%, that's another $2 million a year, maybe you can justify your time. But realistically, most people who have $100 million probably have opportunities that they can go and be looking for something that might do $20 million. And so again, it's kind of like a 10x reward focusing over here as opposed to on this interest. That would be my advice for you. If you've got any questions about this, please reach out to us. Again, you can book a call with me, calvary.com/Michael-Rosmer in the link below. If you have questions, put them in the comments below. I would love to hear what you have to say. And let me know what are some of the best opportunities you're seeing out there. I'm always looking for some myself. Obviously, I've mentioned a bunch on this channel. If you like the video, check out some of the others, and I will see you on the next video.